Today, we're diving into a financial deal that most people probably missed. But trust me, it reveals a huge new trend, the rise of what you might call the billionaire fortress, a whole new way the ultra-wealthy are building their fortunes to last for generations.
So it begs the question, how do the world's wealthiest families really manage their money? And I'm not talking about what they spend it on. I mean, what is the actual system, the architecture they use to control these massive fortunes? Well, that whole game is changing right now.
And a recent, pretty quiet acquisition actually gives us this incredible clue. It's like a peek behind the velvet rope of high finance. And it shows a strategy that's not just about getting richer, it's about creating a financial dynasty. Okay, let's start with part one, the strategic acquisition. This is where we look at one single business deal that, honestly, tells a much bigger story about where wealth is heading.
So, what happened? In the middle of January 2026, Angelus Wealth Management, a pretty big firm, bought up a smaller boutique company called XO Capital. Now, on the surface, that sounds like a totally standard business deal, right? But what they built next, that's where things get really interesting.
And you have to understand, this was not a merger of equals. You've got Angelus Wealth on one side, managing something like $2.6 billion, and on the other side there's XO Capital, this small, specialized firm. This wasn't a random purchase, it was a targeted move to bring their very specific expertise in-house. And the direct result of this whole deal was the birth of something brand new, a specialized group called the Angelus Family Office, or AFO.
So what on earth is the Angelus Family Office? Well, think of it less like a traditional wealth manager and more like a financial command center for the super rich. It's designed to be a fully integrated, custom-built machine that handles everything for its clients. And this all-under-one-roof idea, it's a total game changer. Let me show you why. Which brings us to part two, the integrated wealth fortress. This is all about this new model they're building, a new way to manage and protect massive dynastic fortunes.
This slide nails the difference perfectly. The old way was totally fragmented. You'd hire a lawyer over here, a tax advisor over there, an investment manager somewhere else. It's a mess. It's inefficient, and no single person has the full picture. The new model? It's like hiring one master architect to design and build the entire estate. You're moving from a patchwork of advisors to one single coordinated team.
So when we say under one roof, what does that actually mean? It means one team is handling everything. Your entire investment portfolio, your super complex estate and tax planning, even just watching the day-to-day cash flow. And this is key, they're even finding exclusive private investment deals for you. It's a completely holistic view of a family's wealth.
And what's the goal of all this? It's simple, really. Single platform control. For these families, it's about cutting through all the noise and getting a clean, real-time, bird's-eye view of their entire financial universe. It's about putting them firmly in the driver's seat. And if you want to understand the sheer power we're talking about, just look at this number. By integrating with its parent company, this new analyst family office can tap into over $7 billion in portfolio firepower. That's the muscle of a huge institution combined with the white glove service of a small boutique firm. Okay, let's zoom out for a second in part three and talk about the broader billionaire trend. Because what Angelus is doing, this isn't a one-off. It's part of a much bigger shift happening right now. So, one of the biggest trends we're seeing is that the ultra-wealthy are quietly pulling away from public markets. The stocks and bonds that make up most of our retirement accounts. And why are they doing that? Well, they're looking for more control and, frankly, better returns in a world where the stock market can feel pretty volatile. So where's all that money going? It's pouring into private markets, investing in companies before they ever go public. It's going into direct co-investments, where they partner up on big deals. These are the kinds of complex, exclusive opportunities that you can't just find on your own. You need a team to get you in the door.
And look, this isn't just a hunch. This chart shows that nearly half of the world's billionaires are planning to increase their investments in private equity this year. This is a massive coordinated movement of capital out of the public sphere and into the private one.
And all of this brings us to our final, and I think most important section, the future of capital. Because the really big idea here is that this isn't just about what the wealthy own anymore, it's about how they own it. Here it is. This is the real takeaway. The super rich are no longer just investing in assets, like companies or buildings. They are investing in the very infrastructure of wealth itself.
They're buying and building the systems that will manage, protect, and grow their money for them.
This quote just captures the mindset perfectly. They see themselves as custodians of long-term intergenerational capital. I mean, what does that really mean? It means this isn't about making a quick buck. This is about building a financial machine designed to last for centuries.
So you can see the whole strategy laid out here. It's a three-step process. First, these families want more control and efficiency. Second, they build or buy the integrated infrastructure to get it. And third, the ultimate goal: make sure that capital is preserved and grows for generations and generations to come.
Which leaves us with a pretty big question to chew on. As more and more of the world's wealth gets consolidated into these private, powerful, and totally self-contained financial fortresses, what does that actually mean for the future of finance for everybody else?